Hey guys, welcome to the Commercial Cash Flow Show. Today we're talking about double net and triple net leases and why boring real estate investments can also be good.
Propelio TV is sponsored by Noble Mortgage and Investments, Batch Skip Tracing, Think Multifamily, CreativeCashflow.com, and Lifeonaire.
Hey guys, welcome back to the Commercial Cash Flow Show. I'm Kenny Wolfe, your host today. Ronny Phillip is out today. He's in Southern California enjoying the sun. So today we're going to be talking about double net and triple net leases. These are mostly for retail real estate investments that we've done in the past. We'll dive into why these assets, although they're boring, there's no funny stories about evictions or pigs on the property as pets or whatever like that. So. But today we're talking about those investments and what we did in our last fund, where we bought $7 stores, put them under one fund, and then investors were spread out over all seven of those stores. So that's what we're talking about today. Back in 2017, late 2017, we created a commercial real estate fund where we pooled investors' monies together. Minimum investment was $25,000. A lot of folks tried it out for us first time. It was a rolling investment, so that meant for 12 months we were able to raise funds and then also continue to buy these commercial properties. And then we mostly focused on the dollar stores, just because at the time it was the highest cap rate to interest rate ratio that you could get. They're also publicly traded companies, and they're guaranteed by the companies as well. So that's what we looked at. We like those investments too because they are pretty boring. The double net and triple net leases are things that are great for the investor. So we bought the land, the building. It already had a tenant already in place, so that really helped out. So let's look at this first slide real quick. So here we go. So our goal for the commercial real estate fund, it was our first one back in 2017, was to purchase commercial retail properties to be leased by publicly traded high credit tenants. All leases were to be double net or triple net leases, meaning zero to low overhead for us. We'll jump in later to some definitions of double net and triple net on the next slide. But again, our minimum investment was $25,000. These are a longer term hold, 7 to 10 years most likely, because it is a fund and we have to rotate those commercial properties out of the fund once it's time to sell the portfolio. And it's better to sell in one-offs instead of packages, from what we found out. So we added the portfolio over a 12-month period. We were targeting long-term successful markets nationwide. We ended up buying just in Texas and Oklahoma. We focused on towns of about 2,000 to 3,000 to maybe up to 10,000 in population. We did that to combat the Amazon and the Wal-Mart effect, but we'll talk about that on the next slide as well. A projected annual cash on cash was 7 to 8%. We're sitting right now currently about 7%. That's paid monthly to our investors, which is a solid, steady 7%. They're also getting an 8%, 8.25% annual return based off of us paying down the loan. So that's the principal pay down we've talked about as one of the 4 tools. So that's someone else paying down our note for us. That does not include any appreciation. So you can see there that the projected total annual returns are about 16%, and that's before appreciation. So appreciation in commercial real estate is more of I'd say a fickle thing, and we'll discuss that on the next slide as well. In this fund, we required investors to be either sophisticated or accredited. Accredited, you can look that up. That's very black and white. Sophisticated is something more of a gray area. Sophisticated means you understand the investment, and then we each kind of define that as deal sponsors or syndicators define that as our own. For us at Wolfe Investments, we want the investors to really understand the investment. We want them to fully understand it. Both partners and spouses we want them to be both on board. We've had investors approach me where either the husband or wife was really excited, but their spouse was not. So we did not have them as investors in our deals. So anyways, that's something we're looking for. We like educated investors as well on that. All right, next slide. Okay, so why commercial real estate? Commercial real estate is obviously different than multifamily. We've been doing multifamily for about 8 years. So we jumped into commercial to give our investors another option to invest. We obviously invest alongside our investors as well, so we liked them. Kind of the progression is for a lot of investors is they go from single family to multifamily and then kind of work their way up that way. So I asked Paul Peebles with Old Capital, got to give him a shout out here, but I asked him, okay, what do people do after multifamily? What's the next progression? What's the next step? So he told me people either do medical office or they do double net or triple net leases. And he said not because they make more money, but because they're so much easier and so much less headache than it is for a single family or definitely or multifamily as well. And it's because it's how the leases are structured. So these are typically structured with either triple net, that's the premium one you want, or double net. Triple net means that the tenant pays for all of the repairs, the insurance, the property taxes. Double net means they pay for a lot of that, maybe not all of it. So some of our family dollars that we own are double net leases. So we're responsible for the roof, the structure, the parking lot, and the AC on those deals. So, but the rest of the repairs is on the tenant. They're in charge of the landscaping, the repairs to the signs. I mean, anything like that. So, so they're great deals because there's a lot lower operational risk. Your rent shows up on the first, mortgage goes on the third. There's really not much for you to do. There's not much asset management on these type of after you close. There's not much asset management after post close, I should say. So what we were looking for is rent that's guaranteed by a corporate company, a corporation, right? There's also obviously double net, triple net leases that are guaranteed by franchisees or small mom and pop business owners. We were more focused on going after the corporate guaranteed leases because I could trust their financials. You could look at their publicly shown financials and be able to digest to say, okay, are they making money? What does their balance sheet look like? Can they pay us rent, right? That's what you're looking for. Once you dig into franchisees, I mean, if they own a couple or like 10 or more, then maybe you can probably trust their financials. For us, we stayed away from the strip malls where you have like Linnell's and some of these small mom and pop owners where, yes, they're guaranteeing it, but you don't know their financial situation because they could be maybe misrepresenting themselves through the IRS. So anyways, that's what we were focusing on here. Like I mentioned before, we've got less evictions. Obviously, operational risks are a lot lower than compared to single family and multifamily because you're not chasing rent. The rent just shows up. And then what we look for is those smaller towns because they're kind of shielded from Amazon. Amazon can't ship overnight there until they figure out drones or whatever, right? And then the Walmart effect. A lot of these smaller towns, especially in Texas, Oklahoma, I mean, the next Walmart might be 30, 45 minutes away. So these dollar stores are basically the new general store for these smaller towns. So that's what we look for is the Amazon what residential what commercial real estate we could buy. We're at a higher cap rate, so 7.5% to 9% is what we bought these at. We brought some three brand new ones at a 7.5 cap. We're still seeing some cap rates go up a little bit, and I think that's a big mistake. I think people are looking at the commercial real estate space and looking for and throwing out everything. So because they read the headlines of Toys R Us, Best Buy, those are big box retailers that are going out of business. So and I think that's affecting the entire commercial space, which for us, is a big opportunity. We can take advantage of these higher cap rate purchases by, that rent's guaranteed by a large corporation, and really capitalize for our investors. Also, too, I should go through the progression. So one of our stores in Diana, Texas, we own the Family Dollar there. It's north of Longview, for those that don't know where that is. The cool thing about it is it's the only dollar store in that town. We have about 3.5 years left on that lease. And so what happens is if Family Dollar were to shut down that store early within the next 3-year window, the remaining piece of that initial term on the lease, then they're still on the hook for us to pay rent, even if they shut down the store. Now, if we can find a replacement tenant say Dollar General or one of the other dollar stores as a tenant, or some other tenant in general. We can get them in, and then Family Dollar typically, and then and not just Family Dollar, but other commercial retail folks too. They pay 50 cents on the dollar to get out of that lease on the remaining term. So that could really be beneficial because we bought that deal at a 9 cap at really low rent per square foot. So like $4 a square foot is what we bought it at the current rent level. The brand new ones we bought, the brand new Family Dollars, they're getting about $8 to $10 a square foot, and we bought those at a lower cap rate. So, we're not really hoping Family Dollar exits that store, but if it were to do that, it might be a great opportunity to get either Dollar General or some other commercial retail person in there, and get higher rent and get a lower cap rate. So the appreciation could be really fast on these commercial deals. It's just not as kind of structured or planned out on the as like multifamily. The other thing too is so if they were to close down the store, they would keep paying us rent. Even if they were to go bankrupt, they would owe us money before the bondholders of that publicly traded company. So we feel very comfortable with these leases that we have. They're great leases to have. I mean, a publicly traded company like them, they make their return on investment, if you look them up on Yahoo Finance, is phenomenal. They make a lot of money. So they're a great tenant. I really don't think they're going anywhere. My wife's from small town Texas, and they've had 4 dollar stores in that town, the same ones in that town for at least 20, 25 years, and it's a town of 3,200 people. So these small dollar stores in these towns about 3,000 or higher are something that we really, really like here at Wolfe Investments. So here's some of the highlights. We're hitting about a 7% cash on cash. That'll slowly creep up because in some of our leases there's built-in rent increases, so 10% on the Dollar General. There's some renewals coming up where we're getting automatic 10% gain, so that'll start to creep up. But we pay it monthly, like clockwork, to our investors. And a lot of them enjoy that just steady 7%. Cash on cash, and then the longer term play is them paying down our loan for us. So like I said before, that's about an 8.25 principal pay down, them paying down our note for us, annual return. So before appreciation, we're at 16% on something that's guaranteed by a publicly traded company. I don't know where else you can find that. The bondholders, we're doing better than the Wall Street bondholders, so that's always great. When you can beat them at their own game, it's awesome. And then appreciation, like I said, it's going to be choppy, but basically what we did was build a bond ladder. So the ones that are coming up for renewal, we'll either renew them, or if they don't, we'll get another tenant. But once they come up, you get your highest price for those commercial properties once you have the highest remaining term and obviously the rent as well. It also matters who guarantees that lease as well. So if it's a Family Dollar or Dollar Tree, a more solid guarantor, you're going to get a lower cap rate than say Linnell's or some other tenant in there. Last year, you can see on the map here, we bought 7 stores in Texas and Oklahoma. We've got 5 Family Dollars, and then 1 Dollar General store and 1 Dollar Tree. It's pretty cool. So my wife and kids and everything, we were going up to Broken Bow, Oklahoma, and we happened to drive by our Hugo, Oklahoma store. It was like a 10-mile detour, so I was we made a quick detour, got a cool selfie there in front of the store that we own, bought a Coke. The lady behind the desk, was really neat to hear that. Obviously, I didn't tell her who we were or who I was, one of the owners in that deal. But she said, yeah, she's just so grateful that new store popped up, gave her opportunity to have a job, and then also too, she said they were just really busy there in Hugo, Oklahoma. So pretty awesome when you can create jobs and create a new store there in the community to bring them something that they didn't have before. So that's the map there. Texas, Oklahoma. We really burned through that real fast. So we'll see if there's any Q&A on the questions right now. For those that are new to commercial real estate. It's an investment where you're really, it's more of a cash flow play, so you want to balance your portfolio. Multifamily can be a cash flow or appreciation heavy. This is more of a cash flow play. So if you're looking for just a steady 7% return, 8% cash on cash, somewhere between there, you can get that on and pay it on a monthly basis. It's pretty awesome tool on there. So anyways, but that's the commercial fund that we did last year. We're thinking about doing another one, but for now we're loving the 7 stores that pay us monthly. So anyways, we're going to go to a break real quick. If you have any questions, please type it there in the show notes, and we'll be right back.
The Propelio Academy, an all-in-one education resource for training in wholesales, subject to wraps, short sales, flips, rentals, BRRRR, property management, and more. Go to propelio.com/academy to get your scholarship today. Propelio.com. What does Propelio offer? Lead generating websites, access to true MLS comps, off-market lead lists, and deal alerts. Get them all today at Propelio.com.
All right, guys. Welcome back to the Commercial Cash Flow Show. If you're watching live, make sure to type in some questions for us about commercial real estate, Family Dollar, Dollar General, those dollar stores that we own, or multifamily. Either one, I'll answer those questions as well. Behind me, you can see how to contact us. We're Wolfe Investments, and our email is right there, info@wolfe-re.com, website wolfe-investments.com. If you get a chance to check it out. We've got some big events coming up here pretty soon. I'll be in Denver speaking at Rod Cleef's boot camp on Saturday. That's in Denver. We also have our big conference June 22nd in beautiful Santa Monica, California. We've got some awesome guest speakers lined up. Neil Bauer's coming down from San Francisco. Gene Trowbridge, the guy who wrote the book on PPM and SEC investing. And then Rod Cleef's coming all the way from Florida to come join us there for the event. So come check it out, June 22nd. The link is there on the bottom, mfinvestornetwork.com. Come check it out. The super secret discount is Wolfe. That'll get you an extra $30 off your ticket. So anyways, we've got that going on. One amazing day. It's just networking, education. There's no big $20,000 thing to buy at the end. No rush to the back of the room. This is something where we're going to create a new way for both people new to multifamily or people that have done it for a long time. Come out, meet new people that are interested in the same way to invest in multifamily real estate. So anyways, if you get a chance, come check it out. We've got some awesome speakers, and looking forward to that event. Today we're talking about commercial real estate. So the cool thing is right now there's an opportunity where people are throwing out all retail in kind of the same bucket. They hear Amazon, they hear Wal-Mart, they see Toys R Us closing, going bankrupt. So you've got these things where you've got a lot of folks scared of commercial real estate, but what we're doing is taking advantage of that. So we're buying these at 7.5 and 9 cap rates where the corporations are guaranteeing these leases. I mean, it doesn't get much better than that. So you get to take advantage of that when you can. So like I said, 7.5 to 9 cap rates on these deals where it's very low maintenance for us, very low operational risk. Rent just shows up, mortgage comes out, and the investors get paid monthly, and that just shows up in their bank account or in their mailbox if they haven't signed up with our ACH deal yet. So they're great deals. We're looking for more. We'd be open to other states as well. We don't have to. For multifamily, we really focus on states that are landlord friendly because we do have to deal with more evictions on that process. So states that are not as landlord friendly, we try to avoid. Just that way we can stack the chips in our favor. For commercial, it doesn't really matter. I mean, it's the eviction process is not as lenient on those as well. So what you got to look for is for commercial is who's guaranteeing the lease. That's huge. So you got to know that who's guaranteeing the lease. What is their financial status, and then you've got to then from there you dig into the lease and look at is it double net or triple net. If it's double net, what are you responsible for as the landlord? What is the tenant responsible for? And then also too, you want to look at the length of the term that's left, and then also too, you want to look at how long you have on the remaining term, and you also want to look at what do those rent bumps that are built into the lease look like? Is it 5 years and then you get another 10%, or what is it? And so one of the big things in commercial is that it's nice that your rents are fixed and they're guaranteed, right? That's the good part. The bad part is that the rents are fixed, right? You can't change those as per the lease for a long time. So that's the trade-off. You've got to look at that. You got to look at that. What does that look like for you as the landlord? So here you go. We got a few questions rolling in. If you got more, keep typing them in. We've got a few questions rolling in now. So from Jeremiah, it says, "So do y'all buy?" And Jeremiah must be from Texas. I like the y'all in there. So do y'all buy existing building and get a company to lease, or company up lease, or buy the property with the tenant already there? So the question is, so we buy the existing building. It's already built. So we're buying the land, the building, and the tenant's already in there. So that's our business model. There's other folks that build ground up and go find the tenant. Ours is much more simple than that. We just go, we find the existing store, look at the lease, and then buy them from there. So the rent rolls in that first month. I mean, it's a very simple process on that part. From Ed, we've got, can you go over what the nets are in triple and double nets? Yeah, sure. So triple net is the easiest to define. Triple net means that the tenant is responsible for, obviously, their rent. They're also responsible for the property taxes, the insurance of the property, the upkeep as well. So landscaping, if the toilet goes bad, they have to replace the toilet. Everything is on them. So you're just sitting back collecting a rent check. Double net is most of those are covered by the tenant, but not all of them, right? So in our instance, on our family dollars, the double net means that we're responsible for the structure of the building, we're responsible for the roof, the air conditioner, and then the parking lot as well. So those four things are what we're responsible for on those double net leases. And it's a great way to be. So we're not, like I said, we're not chasing money. We're not chasing rent like we are with multifamily sometimes. So it's nice to have a boring investment that just rolls in cash. Okay, so from Dustin, we've got why dollar stores, and what is your criteria for locations? Really, we like the dollar stores because they were the higher cap rate compared to the interest rates that we were getting on the loans, so that's the biggest return. And the cool thing is, it wasn't a franchisor; those are corporate-owned stores. So those leases are guaranteed by a great cash flowing and return and great balance sheet publicly traded company. So we could look at their financials that are posted publicly and see are they making money? Can they pay us rent? So that's that. I mean, so like, we see Starbucks going for a 5 cap, which blows my mind. People will actually do that. So because right now the interest rates are above that for these deals. So unless you're paying cash for it and just want a 5% return on your money, then that's really not for us. And then locations, we focused on towns that were about 3,000 people or higher. And the reason why we pick those towns for these dollar stores is because, like I said before, this is the new general store. This is the new general store for those small towns. They have to have this. So like if you're having a party at your house and last minute, you can't drive 30, 45 minutes to the next Walmart to get this. So they pop into these dollar stores, and that's why they've done so well. If you look at their financials. And we focus on Texas and Oklahoma because since this was our first fund, the banks wanted us to have them pretty close to the home office here in Texas and Oklahoma. We'll be able to kind of expand that as we go for our next funds and next stores that we're going to buy. on that. So looks like that's it for questions right now, guys. Keep them coming if you got them. We are going to we're going to go ahead and do we're going to do a second break. We'll go ahead and do a second break just to see if there's a few more questions. But anyways, guys, stay tuned. I want to thank Propelio and you guys here in a few minutes. Keep the comments. That way we can keep the answers coming. All right, thanks.
The Propelio Academy, an all-in-one education resource for training in wholesales, subject to wraps, short sales, flips, rentals, BRRRR, property management, and more. Go to propelio.com/academy to get your scholarship today. Propelio.com. What does Propelio offer? Lead generating websites, access to true MLS comps, off-market lead lists, and deal alerts. Get them all today at Propelio.com.
Hey guys, welcome back to the Commercial Cash Flow Show. Looks like that's probably it for the questions for now. If you've got more, type them in the show notes later, and we'll answer them after the fact. So anyways, thanks for watching today. Again, I wanted to kind of tell you all about our Multifamily Investor Network Conference coming up June 22nd, so about a month. Come check it out. We've got some awesome speakers right there. We got Neil Bawa from San Francisco, Gene from right down the road there in Santa Monica, and then Rod is coming in from Florida to come speak. We also have vendors coming in, so they're going to have breakout sessions, and they're going to answer your questions about everything from title to lending to IRA investing, how to invest through your IRA, all those options. So, and again, it's just an educational networking event. No big sales pitch at the end. Not run to the back of the room, high lights on you, kind of sweat you out for $20K. So this is just education and networking. That's really what we wanted to build. So anyways, website is mfinvestornetwork.com. Use the super secret code, discount code Wolfe, WLFE, for about $30 off your ticket there. Come join us June 22nd. The night before, Friday night, there's going to be a private networking event. So look for that as well. To get in touch with us at Wolfe Investments, go to wolfe-investments.com. That's Wolfe with an E. Our email is info@wolfe-re.com as well. So contact us if you got any questions about multifamily or commercial investing. We'd love to talk to you. So today I'd like to again thank Propelio. It's great software. Check it out if you don't get a chance, or if you get a chance, check it out. Propelio.com. You can see it there below me. Check it out. I want to appreciate them. I want to say thank you to them for letting us host this show with them. We'll be back next week. Ronny will be back in the hot seat. We'll be talking about multifamily as well on that show. So check it out. Thanks for watching today, and we'll see you next week.
Propelio TV is sponsored by Noble Mortgage and Investments, Batch Skip Tracing, Think Multifamily, CreativeCashflow.com, and Lifeonaire.
Hey everybody, I'm Ryan with Propelio. If you like what you saw, please subscribe. Turn on those notifications and stick around for more. We have tons of content like this all over our channel. So if you want to learn more about real estate investing, stick around, watch Propelio TV, and we'll see you later.